Hello and welcome. Thank you for watching this session from ESG Excel chaos to one AI-driven ESG source of truth built on Odoo. So in this video, we'll walk through why ESG reporting has become more difficult, why spreadsheets are no longer enough, and what a better ESG workflow looks like when it's supported by a proper system. By the end of this session, you should have a clear understanding of what's really causing ESG reporting stress today, where most organizations are struggling, and how ESG can be managed in a calmer, more structured way using Odoo. My name is Nas and I'll be guiding you through this session, and you'll also see a walkthrough by Joshua Lee, our Odoo Finance and ESG specialist, who will demonstrate how ESG data is handled inside Odoo. So now, let's start with why this topic matters right now. ESG expectations are rising everywhere globally, not only for listed companies, but also for vendors and suppliers supporting MNCs. And more stakeholders are asking for ESG data, more follow-up questions are being raised, and more scrutiny is placed on how ESG numbers are produced, not just what the numbers are. And while ESG work is often delegated, the accountability still sits with leadership. So, the real question here is, how confident are you in the data behind the ESG report? So over here, we know that ESG used to be treated as a once-a-year reporting exercise, which is no longer the case because with standards like IFRS S1 and S2 and growing regulatory and customer pressure, ESG is now part of normal business operations. Boards, auditors, customers, and MNC partners don't just want final figures anymore because they want to understand where the data came from, who owns the data, and how the data was validated. So this shift is what's putting pressure on many organizations today. Now here's the part that often gets overlooked. Weak ESG data isn't just inconvenient anymore. It is risky because with missing evidence leads to audit delays, inconsistent numbers lead to last-minute rework, and errors can escalate into regulatory issues or reputational damage. And even if ESG work is delegated, the accountability still sits with management or leadership. So that is why the system behind ESG matters just as much as the report itself. And at this point, many teams ask, is Excel still okay? And the honest answer is, well, Excel isn't bad, but it has limits because there's no proper version control, no audit trail, and there is no easy way to trace how a number was produced. And most teams end up with multiple final files with each slightly different, and no one is fully confident about which one is correct. So this is where the ESG stress usually begins. And now, this leads us to the real issue, fragmented data. Because finance has some data, HR has some data, and operations and vendors have more data. So, when ESG data is scattered across departments and formats, teams tend to spend more time chasing information than analyzing or improving ESG performance. And as for the consultants, they can only work with what they are given. Weak data in means weak reporting out. So when we're talking about fragmented data, it affects different roles in different ways. As for the leadership, there's a risk of approving disclosures without full visibility. And as for the ESG and compliance teams, its reporting cycles become stressful and manual. And for the finance teams, ESG numbers need to match financial data. And for the vendors, requests keep coming in different kind of formats. So this shows why the spreadsheets don't just slow teams down. They affect confidence at decision-making levels. So in short, everyone feels the pain when ESG data isn't structured. So when we talk about the pain points, the challenges, the expectations, how do we fix this? The answer isn't more effort. It's about one system, one unified system. So in this case, Odoo provides a single ESG data backbone that connects finance, HR, operations, projects, and vendors into one source, which is one source of truth. So the data has clear owners, governance and approvals are built in, and as for the AI, it flags gaps and inconsistencies. So this is where the ESG shifts from firefighting to control. So at this point, it's best to see how this works in real life. In the next section, you'll see a recorded walkthrough by my colleague Joshua Lee. He'll show how ESG data is captured from real operational activity, how emissions are calculated using emission factors, how social indicators like pay gap are computed, and also how ESG initiatives are tracked. As you watch, notice one key idea. ESG numbers are calculated continuously, not assembled at the last minute.
Hi, I'm Joshua from WizAsia. We are an authorized Odoo partner. Welcome to Odoo 19's ESG reporting module, your one-stop solution to manage sustainability metrics and track environmental, social, and governance performance. With Odoo ESG, you can collect, monitor, and report on key sustainability indicators, helping your business stay compliant and transparent while contributing to a better future. Odoo allows you to link data sources for real-time reporting. Emission collection data can be automatically retrieved from accounting journal entries, while HR metrics such as gender balance and pay gap are seamlessly integrated from the employees and payroll modules. You can also install pre-configured ESG source databases such as IPCC or ADEN to automatically retrieve standardized emission factors and sustainability metrics. This ensures your reporting aligns with globally recognized environmental standards while saving time on manual data entry. Every activity can be linked to a specific emission factor in Odoo. Emission factors define what type of gases are emitted, such as CO2, CH4, methane, or N2O, nitrous oxide, and the conversion values used to calculate your total emissions. Each factor can be configured based on the unit of measure, UOM, the uncertainty factor, the emission sources, and the assignation of account, partner, or vendor and products associating emissions to accounting entries, supplier invoices, product purchases for automated reporting. Once configured, these emission factors work seamlessly with your accounting and inventory data, providing automated, traceable emissions tracking across your operations. Odoo's ESG module integrates directly with fleet management to calculate CO2 emissions from employee commuting with precision. Each vehicle model in the fleet module carries its own average CO2 emission rate per kilometre, based on manufacturer data or international benchmarks. Odoo combines this with two key inputs: the employee's work attendance records and the distance between the employee's home and work location. By using these key inputs, Odoo automatically estimates the total commuting emissions for each employee and department. This integration ensures accurate, data-driven sustainability tracking. The ESG module also highlights social responsibility indicators. Using data from Odoo's employees and payroll modules, organizations can monitor gender representation across departments and roles. You can track pay parity by comparing salaries between male and female employees within similar job grades. This empowers HR teams and management to take data-driven actions toward fair pay, inclusivity, and workforce diversity goals. Beyond regulatory reporting, Odoo lets you define your own ESG initiatives and internal goals. You can create custom metrics to track activities such as renewable energy adoption, waste management and recycling, community engagement. Each initiative can be managed like a project, with defined KPIs, assigned team members, and tracked milestones, ensuring accountability, visibility, and measurable progress throughout your sustainability journey. That's how Odoo 19 helps you turn ESG strategy into measurable action. From emissions tracking to social equity and corporate governance, Odoo ensures sustainability becomes part of your daily operations. Start leading your organization toward a smarter, greener, and more responsible future with Odoo ESG reporting. To explore how this works in the real world, visit us at www.wiz.asia or drop us an email at sales@wiz.asia. We're a certified Odoo partner, and we help organizations implement ESG reporting that's practical, accurate, and regulator-ready. We make the ERP talk back with our own AI technology through AI agents. Come and explore our website at www.wiz.asia. Chat with Emma, our friendly AI sales agent who's eager to assist with your organization's challenges. You can scan the QR code to speak to Emma via WhatsApp. Prefer to email? Drop us a line at sales@wiz.asia. Thanks for watching this video. Hope to see you soon.
So what you just saw demonstrate a different way of running ESG. Instead of manually compiling numbers, ESG data is pulled directly from accounting, fleet, payroll, employees, and operations. And we saw a carbon footprint calculations based on real activity, emission factors structured by scope, controlled manual entries for gaps, social KPIs computed consistently, and ESG initiatives tracked as real actions. So the key takeaway here is simple. ESG reporting becomes a result of daily operations, not a separate reporting project. So this is where AI plays a critical role. AI flags missing or inconsistent data before management review. It highlights unusual values that may indicate errors, and it reduces manual checking so teams focus on improvement, not cleanups. So this significantly improves confidence in the numbers before submission. And for this slide, it sums it up pretty clearly, because when you see without a system, you'll get scattered spreadsheets, conflicting numbers, and last-minute scrambling. And when you have a proper unified system, you will get a centralized ESG data, consistent and traceable numbers, and streamlined reporting. So here, the difference isn't effort, it is about structure. So what this means for leaders and teams. So what this enables is much stronger oversight for leadership, because leadership gets real-time dashboards, disclosures are linked back to evidence, approvals are clear and auditable. So instead of guessing or relying on explanations, boards and auditors can see the data clearly. So with a proper structure in place, the ESG reporting becomes predictable. Reporting cycles stabilize, audit stress reduces, trust with stakeholders improves, and teams can make better decisions using reliable data. So with control, ESG data builds confidence and reduces audit risk. So if you're thinking about how this applies to your organization, the practical next step is a short ESG data backbone discovery session, where in this session, we review how your ESG data flows today, identify gaps and risks, and map a realistic improvement plan. It's designed to give clarity, not complexity. Alright, so before we move forward to the end of the video, let's quickly cover a few common objections we always hear at this point. It is nothing unusual. These are the same things most teams ask when they're considering moving ESG out of Excel and into a proper system. I'll go through them one by one just so you are clear on what's real and what the practical way forward looks like. So here, the first one, consultants are enough. Yes, we get this quite a lot, because when they will mention that our consultant handles ESG for us, and that is true, and consultants do play an important role. But here's the reality. Consultants, they don't generate your ESG data. Your organization does. They rely on the data that you provide from your finance, HR, operations, and vendors. And if that data is fragmented or inconsistent, the report will still be weak, no matter how good the consultant is. So one thing that we should remember is that a system doesn't replace consultants. It gives them clean, traceable data so they can focus on analysis and advice instead of chasing numbers. And here, another common one is some might say that Excel still works for them. And that is true, we agree with that. Excel still does work until the expectations change, because Excel has no proper audit trail, no ownership controls, and there is no easy way to explain where a number came from. So as ESG scrutiny increases, what used to be a good enough reporting quickly becomes risky. So the problem here isn't Excel itself, it's using a tool that wasn't designed for governance, traceability, or scale. And we do also hear concerns about disruption to their workflow. But the good news is, ESG systems don't need to be implemented all at once. Most organizations, they start small. For example, they can start with one scope, followed by a few key metrics, and then the top spend categories. And from there, they expand gradually. So the goal here isn't to change everything overnight. It is to remove chaos, not to add more complexity. So when you look at these objections together, that's a common theme here. The concern isn't really about tools or consultants, it's about stability. A structured ESG system gives you predictable reporting cycles, fewer last-minute surprises, clearer accountability, and more confidence at sign-off. The goal is not perfection, it's control. To wrap things up, here are the key takeaways. ESG is no longer optional, but it also doesn't need to be painful. What creates stress isn't the reporting itself, it's unclear ownership, fragmented data, and last-minute manual work. And when ESG data lives in a system, numbers are traceable, reviews are structured, and approvals feel confident instead of rush. The difference is not effort, it's structure. So, with the right foundation, ESG becomes something you manage steadily, not something that you panic about once a year. And that's really the shift we wanted to show you today. Thank you for watching this video. If you'd like to continue the conversation, you can explore a deeper demo or request a structured review of your current ESG process. We hope this video helps you see a clearer, more practical path forward for ESG. Thank you.